Hello everybody, sorry you got a couple minute late start here. Luke Gromen with FFTT, Force for the Trees, founder and chairman. Thanks for joining me again on a Sunday night for our two things that grabbed my attention recently. I'm going to jump right in as we noted before. First off, obviously very big week this week. We've got a Fed meeting obviously on Wednesday and Thursday, and to me the choice the Fed has is lose a little bit of credibility now or lose a lot of credibility in under 3 months because they have a chance now to take a gradual step and understand that they're in tune with what's happening in markets. And if they choose not to avail themselves of this opportunity, in my opinion, they are likely going to have to make a much more drastic step, possibly / probably under much greater conditions of duress. And so it's interesting, actually, as I was getting ready to come on tonight, there's a new op-ed in the Wall Street Journal tomorrow from Stan Druckenmiller and Kevin Warsh, former Fed governor, saying actually not in so many words, saying explicitly the Fed needs to pause both rate hikes and the balance sheet reduction for the time being, which comes with a, obviously those two gentlemen have a lot of gravitas for them to say that. So it's going to be an interesting week. And so that's the first thing. The second thing ties into that. There was an article in FT retweeted today that not a single company has borrowed money through the $1.2 trillion U.S. high-yield corporate bond market this month. And the FT notes that if that drought persists, it would be the first such month of a no issuance in the high-yield market since November 2008, which I think this really ties into the first point in terms of what will the Fed communicate this week, which is needless to say, in November 2008, things were not good. And, of course, the Fed was not withdrawing liquidity. In fact, they were getting ready to embark on the biggest 5-year increase in liquidity into the system in the 100-year history of the Fed. That's not what I think is going to happen, but I think it does speak to the credit markets are issuing warnings. They are asking the Fed to stop. We continue to think they will listen. You know, our research in the last 8 weeks has been that, you know, basically check to you, Fed. You've got the cover to pause. Check to you. We think ultimately they will. So those are the two things that have really grabbed us at this point. We're going to jump. Into a couple quick questions here. Going to keep it real tight to 15 minutes tonight. So, hi Mike. Hey Luke. Who is Victor the Cleaner on Twitter, and how do his views differ from yours? Victor is a monetary historian, I think is probably the best way to characterize what he does. Very bright, and I don't know who he is. I think our views dovetail quite a bit in terms of some of the monetary stuff vis-a-vis a neutral reserve asset, vis-a-vis gold, etc. So that's about all I can answer. I don't know exactly who he is at any rate. Hi, Michael. Buffett's true thoughts on gold. Look, I thought that Jesse Felder had a really interesting blog post probably about 3 weeks ago, in which he noted that Warren Buffett, you can find it in his annual report, that he was extremely long silver in the late 1990s. And there was a fundamental reason for it in terms of shortages, etc. The bottom line is, yes, silver has more industrial use than gold, but it's still a precious metal. I think Warren Buffett understands gold quite well. Look, he said what he said about it, and I think that's the way he feels about it. But I think, maybe that's the best. I thought Jesse Felder's piece was probably indicative of, if Warren sees cause for something, or if Mr. Buffett sees cause for something, he would change his opinion of it, and so maybe that's the best way to leave that. Hi, Doug. Any way that I see that silver could outperform gold? I think that's very possible. It's not my base case. I think, as you guys know, our bull case on gold is ultimately about it moving back into the system and being used to reduce the real value of sovereign debt out there, basically write up gold on central bank balance sheets to recollateralize the system. And so we think gold would outperform silver, but it's, I think, very possible that silver could outperform gold. I certainly wouldn't. I don't have it's not something that I would stake into the ground very strongly and plant both feet and say it couldn't happen. Hi, Mike. Who would crash first, Canada or Australia? I know both have housing issues. I know Australia is more tied to China. I am, quite frankly, not close enough to either situation other than sort of tangentially. There's better people to speak to which situation they think could be worse and why. So I apologize, but that's where I'd leave that. FX US hedges still negative. Last I checked, yes, they were. Last I checked, it's been I don't know, several days. There were a couple different comments on it last week. There was a Wall Street Journal article, or maybe it was Reuters, but the gist of it was that large Japanese insurers were looking at potentially not rolling, to be blunt, which exactly ties into our whole point, which is if FX hedge Treasury yields are negative, there's suddenly a decision for big private sector, primarily Japanese, German private investors, which is either we don't roll, or we roll unhedged, or we lock in a negative rate. And if they don't roll, they can roll it into domestic. In the case in the Reuters article, it was into JGBs they're looking at, because on an FX adjusted basis, JGBs are yielding more than 10-year or yielding higher than Treasuries after the hedge, and they just said we don't want to hedge. And my guess is a lot of people will not want to leave big Treasury positions unhedged, particularly in a conservative business like the insurance business. So let's see here. We've if the dollar, I'm sorry, the second part of that question was, if the dollar weakens, would they go back positive? Yes, they would. And that has been, I think, some of the sense of urgency in our view has been, even with Treasury yields coming in over the last 6 weeks, the auctions have all had tails on them, which is to say the bid to covers or the demand, there's still supply-demand stresses that are building there. And ultimately, we think a way that you resolve that is a weaker dollar. So let's see here. Let me scroll up to some of the other questions. Let me say, you know what? Okay, Uptown problem. I've got so many questions coming so fast. Let me see. How would the Fed engineer a dollar devaluation? Hi, Sasha. How are you? There's a number of different ways you could do it. Treasury could be involved. Historically, the dollar has been the purvey of Treasury, not the Fed. The Fed certainly can affect the international trade value of the dollar via supplying more dollar liquidity. They can do it via swap lines. They can do it via policy. If they stopped tightening the rate, or if they stopped raising rates and also said they're going to stop QT, that would obviously, in all likelihood, have a negative impact on the dollar. There's a number of different ways they can do it. I mean, up to and including they can print money and buy whatever they're allowed to buy in their bylaws. So that's how you could do that. Let's see here. Do I buy into the theory Trump didn't know beforehand that the Huawei exec would be detained? I don't know. Somebody, who did I read last week had a really good piece on that. Oh, it was Larry Lindsey's. Larry Lindsey, the former Fed governor, his consulting firm had an article that Zero Hedge picked up that I encourage you to take a look at. That was had some really good thoughts on it, and I would probably leave that to him because I just don't have a great feeling whether that was the case or not. Let me see. Have I met Roy Sebag, or thoughts on the gold money team? I've not met Roy. I have heard that I need to watch this interview he did with Hedgeye over the weekend, and so I'm looking forward to that. I have seen them I've interacted with Roy a bit on Twitter, I think, in the past, and I've been consistently impressed with his body of knowledge and just I know I've interacted a little bit with James Turk at Gold Money as well. Also been impressed with him, but that's I guess where I would leave that. Hey Luke, if I had one question, hi Gio, if I had one question to ask anybody in the world, to whom and what would that question be? Wow, that's a that's a great question. Boy, I don't even know if it'd be economics related. I'd probably go ask the Dalai Lama something, or I really don't know. I don't think it'd be any of our politicians. I'll tell you that. I think it would. It'd probably be like I said, something of the Dalai Lama. So maybe that's at least that's a who. I don't know about the what. I'd need more time to think about that. Let's see. Hi Doug. How close to very critical is the U.S. fiscal situation? A lot closer than most people think. I don't know if you guys saw over the weekend. The U.S. deficit number came out, and for the first 2 months of the fiscal year, we ran a $305 billion fiscal deficit. That's up 50% year over year, first 2 months of the year. The key, though, is that it is not a fluid situation. It's not a linear situation. Excuse me, it's a fluid situation. It's a non-linear situation. And by that, I mean, if the U.S. economy softens, it gets critical faster. If China has a problem, it gets critical faster. If Europe has a problem, it gets critical faster. All of these things will pull it forward faster. And our work had as of a couple months ago, we thought you had 24 months until more than the true measure of interest expense, gross interest expense, plus the entitlement picture. Pay-go picture was more than 100% of tax receipts, and that's where you run into trouble. That was so we think we're 22 months from that, assuming there's no crises anywhere. That was before the market really started going sideways. Let's see. Does Powell hike this week? I think he probably hikes and then says that'll be the last hike for a while. That's what I think he's going to say, and I think the dollar reacts negatively to that. Let's see. Gerald Ford was eaten by wolves. Do you think the U.S. government would ban individual gold ownership? Laughing at your tag, not your question. I think it's a good question. I do not think they would ban gold. I think if they need, back when they did so in 33, it was money. It's now private property. And if they needed the funds, if they needed to seize assets, it's a lot easier and a lot more productive to use a couple of keystrokes and hijack some of the 26 trillion sitting in 401ks and retirement accounts than it is to send officers out with guns to go track down a bunch, physical gold that even if you got 100% of it would probably amount to $500 billion in the United States. So you could get 50 times more money with a lot less work. And not to say they would take 100% of either, but you understand the ratio of the two. Let's see. What's my opinion on the Chinese economy? A lot of stories about a slowdown, more trouble than the U.S. It does seem like it's slowing much faster than the U.S. The fascinating thing to me is, if China's slowing down fast, if their export business is really slowing down, where does everybody think that stuff's being exported to, right? I mean, it's the whole case on the sanctions was, well, China's going to get the worst because we're their biggest customer, and technically it's not true, but we're one of their biggest customers, certainly. And now, sort of the flip side is, hey, look at sanctions or look at the tariffs. They're working. China's slowing down a lot more than us. Their export business is being significantly hurt. And you kind of go, well, that just means our economy is going to be significantly hurt on a lag in a couple of months when, it sounds like what happened is you had a big slug of orders ahead of tariffs, and it's possible you'll see a big fall off once we get out a couple of months, as orders aren't placed. So the bottom line is, it does appear to be slowing rapidly. But, this is a case like Michael Lewis said. You got two guys fighting in a boat to the death, and one guy beats the other to death, throws him overboard, and then turns and finds that he's tied to the waist to the body he just threw overboard. And I think that's very apropos for the current situation we're in. Does the bear market continue even with a Fed pause? There's some real structural issues. but I think you probably would get at least a bit of a rally. Ultimately, you still have a U.S. fiscal situation. You still have this trade situation you've got to resolve, and neither of those and you still have European issues as well. None of those things are going to be resolved pretty quickly. Will we be talking about Bitcoin 10 years from now? Hi, Eric. I think we'll be talking about it more as, how it can be used to settle assets more quickly within the framework of the existing banking system than we will, or perhaps as some sort of, tied in neutral reserve asset, but I don't know that it'll be Bitcoin as it is now. Hi, Michael. U.S. deficit run rate 2 months at 150 billion. Signal or noise? I think it's signal. I absolutely think it's signal. We're supposed, the tax cuts were supposed to drive tax receipts, particularly coming during 2 months when the stock market sold off sharply. Our case has been and continues to be, and it's not just our case. The data shows from the IRS that the stock market is far more important to U.S. consumer spending and U.S. tax receipts than most people appreciate. And I think this is very possibly a indication of that. So, all right, guys. Well, hey, I am going to jump here. I appreciate it. Sorry I couldn't get to all the questions this week, but I will look forward to talking with you all this week, and let's keep an eye on what the Fed does. And in the meantime, this is probably going to be the last Periscope before the end of the new year. So everyone have a happy holidays and a Merry Christmas and a Happy New Year. And I will talk to you guys on the flip side in 2019. Thank you guys again for joining us for the Periscope. And we'll talk soon, guys. Have a great night.